Okay. Good afternoon to all the participants. Today, we would be revising the concepts of leverages we have already studied in regular batches of LVC. We will also solve the practical problems given in the module to the extent possible. We will try to solve some case studies. We will try to solve MTP, RTP, but again, it is subject to the availability of time. Okay? So let's begin. Yes, good afternoon. Leverages. So in this chapter, you have studied that there are three types of leverages. Ideally, there are two, operating and fixed. Combined is a mixture, combination of operating and financial leverage. Okay? First is operating leverage. Tell me, students, what have you learned or what do you mean by operating leverage? What have you learned in this leverage? According to you all, what does operating leverage means? First of all, see, leverage means risk. This is the term or this is the meaning that you have all well versed with, that you have, all of you know this, correct? So, relationship between EBIT and sales, correct? Correct. Anyone else? Percentage change in EBIT, okay, you have given the formula. Fixed risk irrelevant of business, correct. All of you are correct. So operating risk, if you want to define operating leverage or operating risk, it means risk in the business, risk present in the business due to presence of fixed operating costs. Due to presence of what? Fixed operating cost. The risk that is present in the business due to presence of this fixed operating cost is called operating leverage. Are you getting this? Now, what are fixed operating costs? Can I say all the fixed costs other than financing cost would be my operating cost? Let's say salary per month to the employees. Then if we have taken any property on rent, then rent that is paid, rent expense is also a fixed operating cost. Yes or no? Depreciation on assets, that is a operating cost, fixed operating cost. So the risk present in the business due to presence of such fixed operating cost is called operating leverage. Why fixed cost is called a risk? Why fixed cost is considered as a risk? The reason is, even if the sales varies, even if the sales increase, fixed cost will remain same. Even if sales drastically declines, the fixed cost remains same. So that's why it is called risk. And we know that risk has two sides. One is positive side, one is negative side. Risk has both the sides. So higher the sales, fixed cost remaining constant, you will get boom profit. However, sales is stagnant, is at very meager level. Fixed cost remaining constant, you would be at a loss. Understood? That's why leverages are called, or leverages का दूसरा meaning is risk. ठीक है? And operating leverage measures the sensitivity of EBIT due to change in sales. Someone has rightly said that it is percentage change in EBIT upon percentage change in sales. So it measures how sensitive my EBIT, company ka EBIT is due to frequent changes in sales. Does it vary? See, sales is varying this proportion and EBIT is varying this proportion. So this is called sensitivity of EBIT due to change in sales. Is everyone following? This you have already studied. We are just briefly revising each leverage one by one. Okay? Third is formula. What is the formula of leverage? Operating leverage, which is denoted by OL or DOL, degree of operating leverage. It is nothing but contribution upon EBIT. Yes or no? This is one of the formula. And second formula is OL is equal to percentage change. This topi, this triangle is change ka sign. Change in EBIT upon percentage change in sales. You write sales or you write contribution. It will not have any major effect because contribution exactly varies with sales. Okay? Contribution exactly varies with sales. If sales is increased by 10%, contribution will also increase by 10% only. If sales decreases by 10%, contribution will decrease by 10%. Understood everyone? Any questions in operating leverage? Participants? Any questions? Okay, let's move forward. Understood? Practical case study. We will anyways be solving some practical problems. So in that case, you will understand. In that case, you will understand that. We will be solving some practical problems. Right now, I'm just revising what you have studied till now in the regular batches. Okay. Now, how do you interpret leverage? How do you interpret leverage? Let's say, if for example, my operating leverage comes to 3. How do you interpret this 3? 3 is to 1 or 3 times? How do you interpret this 3? What does operating leverage is equal to 3 means? Bolo. What have you learned? Can anyone please explain me? Can anyone try? What does operating leverage of 3 mean? 3 times or 3 is to 1? Yes. What does it mean? Contribution is 3 times more than EBIT. Okay, partially you are correct, but this is not complete interpretation. I am looking for something more. 3 times increased risk means my risk has increased by 3 times. So again, this is partially, or I would say 10-20% correct, but not a complete answer. Level of risk is higher than sales. Okay. Okay. See, simple interpretation. Don't think very much complex. Keep it very, very simple. Operating leverage of 3 means, see, first of all, you already said that operating leverage is a study of sales to EBIT. Operating leverage is a study from sales to EBIT. Operating leverage of 3 means if I increase, let's say if I increase my sales by 10%, if my operating leverage is 3, then my EBIT will increase by 30%. Are you getting this? This is how you interpret leverage. This is how you interpret operating leverage. Operating leverage is study from sales to EBIT. Start point is sales, end point is EBIT. Now let's say operating leverage comes to 3 by applying the formula of contribution upon EBIT. Okay? So if I increase my sales by 10%, then my EBIT will rise by 30%. Are you getting this? Why? Because fixed cost remains constant. So if sales increases by little proportion, profit will increase by so much of proportion. Are you getting this? In other words, let's say if I increase my sales by 20%, so can I say if operating leverage is 3, then my EBIT in that case will increase by 60%. Can you see the magnifying effect of EBIT due to change in sales? This is due to leverage. This is due to presence of fixed operating cost. Are you getting this? Acha, as I said, leverage is risk. Risk means if sales falls, let's say my sales falls by 40% and my operating leverage is 3, then my EBIT will fall by 120%. A risk है. Risk means if नीचे गया, then loss, it will result into very much of or huge loss. My profit will fall down very drastically. So can you see the magnifying effect of change in sales to EBIT? This is what, or this is how you interpret operating leverage. Are you getting this? Is everyone following? Is everyone following this? Bolo, any questions? Yes, if 1% Shoaib is correct. Understood? First was operating leverage. Second was financial leverage. See, operating leverage is the risk in the business due to presence of fixed operating cost. Similarly, financial leverage is risk in the business. Is risk in the business. Again, leverage means risk. So financial leverage would be risk in the business due to presence of not fixed operating cost but fixed financing cost. Operating leverage was due to presence of fixed operating cost, whereas financial leverage is the risk in the business due to presence of fixed financing cost. Now what do you mean by financing cost? Simple, cost incurred to raise finance. Cost that a company will bear to raise capital, to raise finance. So from which sources company can raise finance? Can I say it can raise finance from debt, it can raise finance from preference shares, and it can raise finance from equity share capital. Or equity shares के साथ you can also have some reserves and surplus. ठीक है? Can I say with debt will come interest? Yes or no? Irrespective of company's earnings, company has to pay fixed interest to the debt holders or to the debt providers to the company. Correct? So can I say interest will be the cost on debt? So in other words, interest is a financing cost. Yes or no? With preference share capital will come preference dividend. Yes or no? With preference share capital will come preference dividend. And again, preference dividend is also a fixed percentage. Irrespective of company ka earnings, whether very high or very low, preference shareholders will get their fixed percentage. When I say preference dividend is also a financing cost incurred to raise preference shares. Understood? With equity and reserves will come equity dividend. Yes or no? To equity shareholders, I will give them, my company will give them equity dividend. Yes or no? So to raise equity shareholder, my company gave equity dividend. Can I say that is also financing cost? I can say that that is also financing cost. But my question is it a fixed financing cost? Is equity dividend a fixed financing cost? Equity shareholders will get fixed percentage of dividend every year irrespective of the earnings? Absolutely not. If earnings are huge, then board of directors can decide to pay dividend. However, ultimate decision to approve that decision would be on shareholders. If my earnings, if company's earnings are very low, then company may not give dividend to equity shareholders. Correct? So equity dividend is a financing cost, agreed, but it is not a fixed financing cost. And as far as financial leverage is concerned, we are talking about fixed financing cost. So in that case, our fixed financing cost would be interest and preference dividend. Understood? So in this entire world, there is only two type of fixed financing cost, interest and preference dividend. All the other fixed cost other than interest and preference dividend would come under operating fixed cost. Are you getting this? So financial leverage is the risk in the business due to presence of interest and preference dividend. Okay? इसके अलावा सारे फिक्स्ड कॉस्ट वुड बी ऑपरेटिंग फिक्स्ड कॉस्ट. बोलो, एनी क्वेश्चंस? How can we say risk? Risk is because they carry fixed burden along with them. So if debt holders provide me or provide the company debt, can I say they will ask for fixed percentage of interest? So irrespective of company ka earning, let's say company ka earning is huge, interest cost will remain constant. Let's say if my company is not making any sales, then also I have to pay that fixed cost. So in that sense, it is a risk. From fixed percentage angle or from fixed incurring angle, that is a risk. Understood? Srini, clear? Okay. And again, financial leverage की formula is, one formula is EBIT upon EBT. Yes or no? This is the formula that you have learned. Second formula is financial leverage is equal to percentage change in EBT upon percentage change in EBIT. Correct? Percentage change in EBT or EAT or EPS. This is the formula that you have learned for financial leverage. EBT, EAT and EPS will go in same proportion only. Are you getting this? So one formula of financial leverage is EBIT upon EBT. Second formula is financial leverage is equal to percentage change in EBT upon slash, either you can say EBT or earnings after tax or EPS divided by percentage change in EBIT. Okay? This formula can be used when there is no preference share in the capital structure. When there is no preference share capital in the capital structure, only then you can use this formula. When preference share capital is there in the capital structure, then I hope you remember the formula. It is nothing but EBIT upon EBT less preference dividend divided by 1 minus T. This was the formula. When preference share capital is present in the capital structure. I hope you remember this formula. Okay? Now let's see how you interpret financial leverage. Again, let's say my financial leverage is 2.5. 2.5 times or 2.5 is to 1, anything you can say. What does this 2.5 mean? Bolo. How do you interpret this 2.5? Please help me. Let's say by applying the formula of EBIT upon EBT, my financial leverage comes to 2.5. What does this 2.5 mean? How do you interpret this? See, if I teach the formula to 11th class student, to 10th class student, even they can simply apply the formula and calculate. Our task is to interpret. Our task as a financial management or as a financial manager or as a CFO is to interpret the calculation. That is our job. Otherwise, anyone from 10th class, 11th class can simply apply this formula and give you the answer of 2.5. But our task is not just calculation, it is interpretation. Bolo, what do you mean by financial leverage of 2.5? EBIT is enough to pay, okay. That is again partially correct. Shoaib is perfectly correct. 1% change in EBIT will result in 2.5 percentage change in EPS. So financial leverage studies the sensitivity to EPS due to change in EBIT. This is what financial leverage says. It is a study of sensitivity to EPS due to change in EBIT. Yes, if my EBIT increased by 1 times, EPS will increase by 2.5 times. Correct. If you are calculating in times, then Swati's answer is correct. And if you are calculating in percentage, then Anmol and Shoaib answers are correct. So it means, first of all, you need to remember that financial leverage is study from EBIT to either EBT or EAT or EPS. Financial leverage is study from EBIT till EPS. Sales to EBIT, operating leverage. EBIT to EPS, financial leverage. Sales to EPS, combined leverage. Okay? So again, it means if I increase my EBIT by 10%, then my EBT will increase by 25%. Not just EBT, but earnings after tax and EPS will also increase by 25%. Are you getting this? Not just increase. Let's say, since it is a risk, it has both the effect, positive effect, upward effect, and downward effect. Are you getting this? Let's say if my EBIT decrease by 25%, then see the fall in EBT would be 100%. Not just in EBT, but earnings after tax and EPS as well. Understood, everyone? So we quickly revised operating leverage, financial leverage. Last but not the least, combined leverage. Last but not the least, combined leverage. Combined leverage is just mixture of both the leverage. Combining both the risk. So can I say it is risk in the business? Risk in the business due to presence of both fixed operating cost and fixed financing cost. Combined leverage is the risk in the business due to presence of fixed operating cost and fixed financing cost. The formula to calculate combined leverage is, one is operating leverage. You just multiply the operating leverage with financial leverage. Yes or no? From this formula, I can derive another formula. Operating leverage का formula was contribution upon EBIT and financial leverage का formula was EBIT upon EBT when there is no preference share capital present in the capital structure. In that case, combined leverage comes to contribution upon EBT. This formula can be applied only when there is no preference share capital in the capital structure. No preference shares. It means there is no preference dividend. Okay. Another formula, combined leverage, is again operating leverage into financial leverage. It is nothing but operating leverage is nothing but contribution upon EBIT. Now, let's say preference share capital is present in the business. So when I say the formula would be EBIT upon EBT less preference dividend divided by 1 minus T. So again EBIT would be knocked off. Therefore combined leverage is nothing but contribution upon EBT less preference dividend divided by 1 minus T. When preference dividend is present, is present in the business, in the capital structure. Understood? Bolo, any queries? Another formula. Again, we will take the base of OL into FL. OL was percentage change in EBIT upon percentage change in sales or contribution, correct? And financial leverage का formula was percentage change in EBT or EAT or EPS, the whole upon percentage change in EBIT. So again, can I say percentage change in EBIT will get knocked off? So CL is equal to percentage change in EBT or EAT or EPS divided by percentage change in sales or contribution. ठीक है? This is all about combined leverage. बोलो, any queries? Any queries? Any doubts? Leverage, I would say it is the easiest chapter of financial management syllabus of paper 6A. 62.5, yes, okay. Correct, 62.5, not 100%, it was 62.5. 25 into 2.5. 62.5, okay. Calculation error. Follow any queries in combined leverage? Again, let's say if combined leverage is equal to, our operating leverage was 3 in the example and financial leverage was 2.5, correct? So let's say combined leverage is 7.5. 7.5 times or 7.5:1. What does this combined leverage of 7.5 mean? Bolo. How will you interpret this 7.5 times? Please try. Sales increase by, yes, PBT or PAT or EPS will increase by 7.5%. Correct. Study of combined leverage is again, it starts at sales and it ends at, either if the statement is still EBT, then it will end at EBT. If tax is given, then it will end at EAT, earnings after tax. Number of shares is given, then it will end at EPS. Okay? So 10% increase in sales will have magnifying effect on EBT or profit after tax or EAT by 75%. Are you getting this? This is how we interpret this. And our job is to interpret this, not just calculation. That is very easier part. Our job is to interpret this. Okay? If it decreases by 20%, so can I say it will have downfall, very much huge magnifying effect in EBT, EAT, EPS, and my EBT, EAT, EPS will fall by 150%. Are you getting this? Understood, everyone? Follow. Everyone, any doubts? I would say this is the easiest chapter of this paper 6A, financial management. 4 to 5 marks question can be asked and it is a bonus for us. Okay. So I think we have quickly revised the concepts of all the three leverages. Our next task would be start solving practical problems as much as possible till the time permits. Okay? More and more practice of problems will help you in clearing all the concepts and will help you in getting examination ready. MOS, margin of safety. MOS is margin of safety. I hope you have learned this in costing paper. Costing, MOS. It is nothing but margin of safety. This you have learned in costing paper, I guess under material costing. What is MOS? It is nothing but actual sales less BEP. BEP sales means break even sales upon actual sales into 100. This is how you had calculated margin of safety. Are you getting this? One sales is actual sales and one sales is break even point sales. Break even point sales means sales where there is no profit, no loss. So margin of safety was difference between the actual sales and break even sales. And if you want to calculate in percentage, we divide it by actual sales and multiply it by 100. Okay? Now, margin of safety, as far as margin of safety and operating leverage is concerned, margin of safety is inversely proportional to operating leverage. How? See, can I say operating leverage means risk? Yes or no? So higher the safety margin, lower would be the risk. Think as a layman. Higher my safety margin, lower would be the risk. Think from that perspective. More the margin of safety, less the risk in my business. So it is always inversely proportional to operating leverage. Okay? Yeah, are you getting this? Are you getting this? Now, so in other words, my MOS is nothing but 1 upon operating leverage, or operating leverage is 1 upon margin of safety. How to derive the formula? How is this formula derived? How it is inversely proportional to operating leverage. So I explained you. Higher the safety margin, higher the safetiness. Can I say lower would be the risk? Yes or no? So from that perspective, margin of safety is inversely proportional to operating leverage. Operating leverage is nothing but operating risk. Or in other words, risk is inversely proportional to safety margin. So the formula is devised like this way. Let's say MOS. So we know the formula of MOS. MOS is nothing but sales minus BEP sales upon actual sales. Yes or no? Correct? Let's multiply the numerator and denominator by PV ratio. Let's multiply the numerator by PV ratio. I am trying to derive the formula now. And let's multiply the denominator also by PV ratio. So if I multiply the numerator by PV ratio, I have to multiply the denominator also by PV ratio. Yes or no? Only then there will be no effect in the answer. If I just multiply the PV ratio by on the numerator, then answer would differ, na? So to make it equal, I have to multiply PV ratio in the denominator as well. Correct? This is normal 7th class maths. Now, numerator, can I write this way? Sales into PV ratio minus BEP sales into PV ratio. Yes or no? Numerator can be segregated by this way, sales into PV ratio and minus BEP sales into PV ratio. Correct? And denominator, I can write it as sales into PV ratio. Now, costing students, remember what is sales into PV ratio? Can I say this portion is nothing but contribution? This you have studied in costing. Sales multiplied by profit volume ratio gives you contribution. Yes or no? So my denominator, again, it will be contribution. Now what is BEP sales into PV ratio? Can I say BEP sales का एक formula था in costing. that you have learned. BEP sales is nothing but fixed cost divided by PV ratio. Hope you are recollecting all these formulas. If not, then you have to revise costing as well. So can I say BEP sales into PV ratio will be my fixed cost? Yes or no? Bolo, any query still here? I am trying to derive the formula why margin of safety is inversely proportional to operating leverage. I am trying to derive that. Just to derive the formula. Simple formula. Just to derive the formula. Answer will not differ. Na? If I multiply anything by the same variable on numerator and denominator, answer will not have any effect. That's why I've multiplied on numerator and on denominator as well. Because it will not have any effect on my answer. Are you getting this? So when I say my BEP sales into PV ratio is nothing but fixed cost. So in other words, can I say this part of the formula is nothing but fixed cost? Students, any question? Can I move forward? Can I move forward? So in other words, देखो, my formula will now look like this. MOS is equal to contribution less fixed cost, the whole upon contribution. And in other words, contribution minus fixed cost. Can I say it is nothing but EBIT divided by contribution? Yes or no? This is MOS ka formula. And what was operating leverage ka formula? It was nothing but contribution upon EBIT. Can you see both are inverse to each other? Both are exactly opposite. Understood? So that's why MOS, hence proved, MOS is inversely related to operating leverage. And think as a layman, na, higher the safety margin, lower would be my company ka risk. And lower the risk, lower the operating leverage. The core logic is this. Well, any queries? How MOS is inversely related to operating leverage? I gave you a simple core logic and I also tried to prove from the formula. From the formula. I will wait for 1 minute for you to digest all the things that we have discussed till now. Any questions still here? Students, are we going at a perfect pace where you all are able to digest? Okay, let's move forward. Okay. Now, operating leverage is nothing but contribution upon EBIT. Financial leverage, when no preference shares are present, it is nothing but EBIT upon EBT. Combined leverage is contribution upon EBT. Can I say all these variables are coming from which document? Can I say they are coming from income statement only? Contribution, EBIT, EBT, EAT, everything is coming from income statement only. So my income statement for this chapter, it would be a source document for my calculations. For leverages, the source document of financial statement is income statement. So let's quickly revise income statement ka format. It is sales. We started from sales less variable cost. And here we assume that it will vary with sales. If sales increases, variable cost will increase. If sales falls, variable cost will fall. The resultant figure is called as contribution. We subtract fixed operating cost. The resultant figure will be my operating profit, or in other words, we call it as EBIT. We will subtract interest. I will get earnings before tax or profit before tax. Then we will pay tax to the government. The resultant profit is called as earnings after tax or PAT, profit after tax. Anything is correct. Then from profit after tax, we pay preference dividend if preference share capital is there in the capital structure. Now the resultant earnings is called as, now this earnings belongs to entirely to equity shareholders. अब जो बचा वो किसके लिए? अल्टीमेट ओनर्स के लिए. And if we divide this by number of equity shares, if we divide this by number of equity shares, I will get EPS. I will get EPS. ठीक है? This is a quick revision of income statement. Operating leverage का study starts from sales and ends here till EBIT. This is study of operating leverage from sales till EBIT. Financial leverage का study starts from EBIT and it ends at EPS. It ends at EPS. This is financial leverage. And combined leverage, it starts from sales and it will end at EPS. This is combined leverage का study. This is what we have just discussed about. ठीक है? So a quick revision is done for all the three leverages. Bolo, any questions still here? We also discussed MOS and how MOS is inversely proportional to operating leverage. We have seen that as well. Any questions now? Okay, let's take some practical problems. Question number 1. Practical problem, not illustration. Page number 6.32. Now let's try to solve as many questions as possible so that our concepts are clear in better terms. Question number 1, page 6.32. From the following information extracted from the books of accounts of IMAX Limited, calculate percentage change in EPS if sales increases by 10% and fixed operating cost is 1,57,500. EBIT is 31,50,000. EBT is 14 lakh. First of all, you need to identify what is asked in the question. Can I say they have asked percentage change in EPS? Problem number 1. They have asked what? Percentage change in EPS, correct? They have asked percentage change in EPS due to percentage change in sales. If sales increase by 10%. So in other words, indirectly, can I say they are talking about combined leverage? Yes or no? Sales or EPS का study, friends, sales or EPS का study from sales to EPS, sales from EPS, can I say they are talking about combined leverage? Yeah, are you getting this? So first task in this question is to calculate combined leverage by applying the formula. Combined leverage is nothing but contribution upon EBT. Contribution upon EBT. Yes or no? So my contribution in this case, it will be nothing but, I am going reverse now. EBIT is given and fixed operating cost is given. If I add fixed operating cost to my EBIT, can I say I will get contribution? See this chart. They have given me this figure, EBIT, and they have given me fixed cost, fixed operating cost. So can I say if I add, I'm going reverse now. If I add fixed cost to EBIT, I will get contribution. Yes or no? So my numerator is solved. And EBT, they have already given in the question. They have already given in the question, which is 14 lakh. And I say my EBIT is 31 lakh 50,000 plus fixed cost is 157,500 divided by 14 lakh. Bolo, how much is my combined leverage? How much it comes? 3150 plus 157,500 divided by 14 lakh. 2.3625. Everyone, 2.3625. Is everyone getting this answer? Correct. Understood? So, calculation part is done. Now we have to interpret. See, again I am saying this calculation can be done by 11th class, 10th class, 12th class student as well. Our job is to interpret. How will you interpret this 2.3625? Combined leverage of 2.3625. How will you interpret this? Can I see if my sales increase by 10%? My combined leverage will increase by, my EPS will increase by 23.625%. Correct? This is how we interpret it. This is what we have learned few minutes before. It means 10% increase in sales will result in 23.625% increase in EBT or EAT or EPS. Correct? Correct? So therefore, percentage change in EPS is nothing but 10 into 2.3625, 23.625%. समझा सबको? This is what they have asked in the question. You have to calculate percentage change in EPS. This is what they have asked. So my EPS will change by 23.625% if sales increases by 10%. Understood? This is how you interpret combined leverage. Correct? Swati, you are correct. And this is what question has asked you. If sales increase by 10%, my EPS will increase by 23.625%. This is what question has asked. Now let's check whether our interpretation is actually holding true or not. It's actually coming true or not. Srini had this query very initially. So let's check. Okay? Let's check. If I increase my sales by 10%, will it result in increase of 23.625% in EPS? Let's check that. But we don't have sales ka figure, na? So in this question, we will not be able to solve. In some other questions, we will take. Because we don't have sales ka figure. But we have, okay. If sales increases by 10%, if sales increases by 10%, so can I say my contribution will increase by 10% only? Because contribution goes exactly parallelly with sales. If sales fall, contribution will also fall to such extent. So we have contribution in this question. So we can start it from contribution. Will increase by 10%. Okay? So my original contribution was how much? my original contribution, can I say it is nothing but 31 lakh 50 plus 157 500? It comes to 3307 500. Yes or no? Now let's increase this by 10% because since sales have increased by 10%, my contribution will also increase by 10%. So when I say my new, this is old contribution and new contribution. My new contribution would be 33 lakh 07 500 plus 10%. 36, 38, 250. From this, we subtract fixed cost, fixed operating cost, which is 157 500. Fixed cost will remain same. That's why it is called as fixed cost. So when I say my EBIT will be 31 lakh 50, and in this case it will be 36, 38, 250 minus 157 500, 34, 87, 50. Is everyone following? Bolo, any queries still here? Is everyone following? 34, yes, okay. If I subtract interest, can I say I will get EBT? Yes or no? EBT, it is given in the question, it is 14 lakhs. So when I say the balancing figure would be my interest, 3150 minus 14 lakh. 17 lakh 50,000 would be my interest. And since interest is a fixed cost, it will again remain same. My new EBT comes to 34 8750 minus 17 lakh 50,000 comes to 17 lakh 3350. Any queries still here? In the present question, there is no tax rate given. But let's assume tax at 30%. We are assuming this from our side. Let's assume tax at 30%. So when I say 14 lakh ka 30% would be 4 lakh 20,000 in the old case. And in new case, it would be 173350 ka 30%. 519105. 519105. So my EAT comes to 10 lakh. Sorry, how 10 lakh? 14 lakh minus 420. 980. It comes to 980. And here in newer scenario, it will come to 173350 minus 50%. 12 double 1 12 double 1 245. Since there is no preference share capital details given in the question, we will ignore preference dividend and let's assume the number of equity shares is 1000. It is also not given in the question, but for our understanding, we are taking this detail. Let's assume it is, okay, let's take 10,000. So if we divide this by 10,000, number of equity shares, can I say I will get EPS? Here it comes to 121.1245 and here it comes to 98. Bolo, any questions? Any questions? Can I say now just see, ये EPS, it was 98 under older scenario and now it is 121.125. It would have increased by 23.625%. Check this. Check this. 98 plus 23.625%. Do this, you will get this answer. Is everyone following? Are what is, sir? Is the decrease in sale is more than increase in sales in absolute? I didn't get your question. What? Srini, I didn't get your question. Decrease in sales percent is more than increase in sales percent in absolute amount. How? It would be same na if I see in the present question it was given that sales increased by 10%. So I have added 10% to my contribution. If there would be sales decrease by 10%, then I would subtract 10% from my contribution. Check this. How much percent increase in my EPS has happened? It was 98 and now it is 121.1245. Can I say it has increased by 23.625%? Yes or no? And this is what combined leverage said. Combined leverage said not just EPS. Check this also. EAT also. It would have increased by 23.625%. Check this also. 980 do 98 take 9 lakh 80,000 on Calci and add 23.625%. It would come to 12,11,525. Hey, are you getting this? And combined leverage also said not just EAT and EPS, EBT will also increase by 23.625%. Check this also. Hey, please respond. Have you understood this? I increased my sales by 10%. This is what it was asked in the question. So the resultant answer is my EPS will increase by 23.625%. And this is what we have solved over here. This is how we calculated using combined leverage का interpretation का formula. Srini, now you are clear how leverages work. Same analogy you can apply to operating leverage and you can apply to financial leverage as well. This is a very quick way of solving. This is a very quick way of solving. Directly you can solve. If my sales increase by 10%, then by how much percent my EPS will increase? This is just applying the concepts of combined leverage. And within 2-3 lines, your answer is done. If you are not able to solve by this way, you have to solve by preparing a table, by preparing a format, by preparing an income statement, which will be little time consuming for you all. Understood? So it is better to just focus on the concept and try to solve using the concept. Otherwise, you can use this method also. You can prepare this entire table, entire income statement, old and revised. I hope now it is clear to you all. So let's move to question number 2. Consider the any questions here? Okay, let's check the answer. Answer is 23.625%. See, can you see the answer? Hence, if sales increase by 10%, EPS will be increased by 23.625%. And we have verified the result as well. We have verified the answer as well. Next question. Consider the following information for Mega Limited. Production level is 2,500 units. Contribution per unit is 150. OL operating leverage is 6. Combined leverage is 24 and tax rate is 30%. Compute earnings after tax. Here they have not asked about any leverage. They have asked us to calculate earnings after tax. Bolo, earnings after tax. How will you calculate? Problem number two. Problem number two. See, the chapters of leverage and ratios is a treasure hunt game that we used to play in our childhood. This is how I tell every student that leverage and ratios chapter is a treasure hunt game. From one ratio, treasure hunt game में क्या होता था? How we used to find other clue. From one hint, we used to jump to other hint. From other hint to third hint. From third hint to fourth hint, and till the last hint. This is how our treasure hunt game used to work. Similar analogies for this chapter and ratio. From one leverage to another leverage. From another leverage to another hint. From another hint to third hint until the last destination. Ratios was also solved using similar analogy. From one ratio used to get information on another, and from that ratio on third, then on fourth, and then till the final answer. So leverage and ratios, you remember, it is a treasure hunt game. From one clue to another, another to third, third to fourth, fourth to fifth, until final destination. So let's play the treasure hunt game over here as well. Can I say they have given combined leverage and operating leverage? So I will be easily able to calculate financial leverage, yes or no? If operating leverage and combined leverage are given, then financial leverage is nothing but combined leverage divided by operating leverage. Correct? Correct? So in other words, can I say combined leverage is 24, operating leverage is 6. So my financial leverage comes to 4. Yes or no? Acha. Is everyone following? Any questions till here? Bolo. Any questions till here? Any questions? If you don't want to solve this way, there is another way as well. Combined leverage is nothing but contribution upon EBT. The formula of combined leverage is nothing but contribution upon EBT. Yes or no? My combined leverage is 24. My contribution is 2500 into 150 divided by EBT. Correct? So therefore, my EBT would be contribution 2500 into 150 divided by 24. Yes or no? My EBT comes to 15,625. So therefore, EAT would be 15,625 minus the tax rate. Tax rate is how much? 30%. Less 30%. Less 30%. So it comes to 10,938. So no need to calculate financial leverage as well. You can directly use combined leverage and solve. Working note 1. Calculation of EBT using combined leverage. So here the combined leverage was the hint of our treasure hunt game. So using combined leverage, we calculated another hint, another clue. Another clue was EBT, and from EBT we reached to EAT. This is how you solve leverages and financial ratios के practical problems. Any doubt in practical problem number 2? Here our hint was combined leverage, and from combined leverage we first calculated earnings before tax, and from earnings before tax we just simply subtracted the tax rate. Any queries? Any confusion? Any doubt? Are you all able to digest leverages in your mind? Can we move to question 3? Okay, let's move to question number 3. From the following information, prepare income statement of company A and B. I will help you all to solve for company A, and for company B, I would want you all to try it by yourself. Okay? First, understand what is asked in the question. What is asked? Income statement they have asked. Yes or no? They have asked income statement. So your approach should be first prepare the format of income statement. Your approach should be first prepare the format of income statement. And I am just preparing income statement for company A. You all will prepare it for company B. My income statement will start with sales. I will subtract variable cost. Then the resultant figure is called as contribution. I will subtract fixed operating cost. The resultant figure is called as EBIT. I will subtract interest from EBIT. The resultant figure will be EBT. I will subtract tax rate, not tax rate, but the tax amount. And my resultant figure will be EAT. They have not given any information on preference share capital in the question, neither on the number of equity shares. So my format, my income statement will end at earnings after tax. Okay? So first step, whenever income statement is asked, prepare the format. Just prepare the format. Don't worry about the numbers. Don't worry about the numbers. Prepare the amounts or numbers. Don't worry about that. Just prepare the format. Second task is to write the amounts that are directly given in the question. Bolo. Which amount is directly given in the question? Can I say they have given interest ka figure 3000 and 2000? So I will write that down. This is the second task. 3000 and 2000. Okay. Any other amounts directly given in the question apart from interest? No, I can see leverage is given and I can see tax rate given, I can see PV ratio given. No other amounts directly given. Okay. So our third task is now to pick some hint from this information. First step, prepare the format that we have done. Second step, the amounts that are directly given, enter that amount or write that amount in the format. That also step 2 is also done. Now, from this question, try to pick a hint. Try to start your treasure hunt game now. Try to start your treasure hunt game. My treasure hunt game will start here from financial leverage. See how it will work. Working note 1. Financial leverage. Can I say the formula is EBIT upon EBT? Yes or no? Acha, in other words, can I write this way? EBIT upon EBIT minus interest. EBT is nothing but EBIT minus interest only. Na? So in other words, I have this figure, interest ka figure. I have this financial leverage. So from this financial leverage hint, can I say I can easily calculate EBIT? Is everyone following? See, this is how you pick hints and try to find another clue. Understood? With the help of financial leverage, we will be able to solve EBIT. Okay? So my working note 1 would be calculation of EBIT using financial leverage. Calculation of EBIT using financial leverage. Now, how much is the financial leverage given in the question for company A? 4. 4. Yeah, I am solving just for company A. Huh? You have to solve for company B. Four for company A. For company B. Three. I am not solving for company B. Yeah? EBIT. We don't know. We have to calculate that only. EBIT. We don't know. Minus interest. Can I say interest is 3000, which is given in the question? Therefore, EBIT for company A comes to how much? By simultaneous equation, you will be able to solve EBIT for company A. बोलो कितना आया? Normal mathematical equation for EBIT 12. 4000. Everyone? Yes or no? 3000. Now it is normal math. So this EBIT minus 3000 will go up. So 4 EBIT minus 12,000 is equal to EBIT. So 3 EBIT is equal to 12,000. 4,000 आएगा. My EBIT will come to 4,000. Everyone is getting 4,000. Please reply. No. For company A, company B, you have to do it in your homework, not now. We are just solving for company A. So you solve it for company A with me. For company B, you do it at your home. आराम से. ठीक है? So EBIT is 4,000. Okay. So I will write here 4,000. And this I am able to solve from working note 1. So in other words, my EBT would be 1,000. Correct? Tax rate is 45%, which is nothing but 450. And my profit after tax would be 550. Correct? So from EBIT to EAT, my income statement is prepared. Now my task is just to fill up the upper portion of the income statement. This portion of the income statement I need to fill. Now from EBIT, we have calculated EBIT. So this is clue number 1 that we found from financial leverage. Now from this EBIT figure, try to find some another figure, trying to find some another variable. So when I say we can use the concept of operating leverage, operating leverage is given in the question, not directly given, but margin of safety is given. Yes or no? So operating leverage is just inverse to margin of safety. This is what we have understood. This is what we just quickly revised an hour back. And from operating leverage, we will be able to solve contribution, and by applying the PV ratio, we will get. This is how we have to reach to the final destination. Working note 2 is calculation of operating leverage. Operating leverage is nothing but 1 by MOS. So for company A, it will be 1 by 0.2. 0.2 ही है ना? Yeah, it's 0.2. So my operating leverage is 5 times. My operating leverage for company A is 5 times. So when I say from operating leverage, I can calculate contribution. How? I have operating leverage ka figure. I have EBIT ka value with me. So I can easily find contribution. Yes or no? So from operating leverage, we are able to solve contribution. So working note 3 would be calculation of contribution using operating leverage. Okay? Again, I am just solving for company A. For company B, you need to do homework. Operating leverage is 5 for company A. Contribution I don't know. EBIT is 4,000, which was given in the question, which we solved through working note number 1. So when I say my contribution comes to 20,000 for company A, correct? So I will just substitute here 20,000, correct? And this I have derived from working note number 3. From working note number 3, correct? So बातों बातों में my fixed operating cost would be 16,000. This would be the balancing figure. Yes or no? Now my task is just to find the sales and variable cost. And can I say sales variable cost and contribution has some relation with profit volume ratio? Yes or no? These three variables, sales, variable cost and contribution, has some or the other relation with PV ratio. So using PV ratio, we can calculate sales and variable cost. Oh shit. I lost my saved file. My EBIT for company A. It was 4,000. This was 4,000. So my EBT comes to 1,000. Tax at 45%. This was 450 and this was 550. EBIT we calculated from working note 1. From working note 3, we were able to solve contribution and contribution amount was 20,000. And my fixed operating cost in that case was balancing figure. Okay? Now working note 4. Using PV ratio. Using PV ratio. Can I say I will be able to calculate sales for company A? It is nothing but contribution upon PV ratio. Yes or no? Contribution is 20,000 and my PV ratio for company A is 25%, means 0.25. Therefore, my sales comes to 20 divided by 0.25, 80,000. So I can substitute this value of 80,000 in my income statement, and this is from working note 4. So when I say balancing figure of 60,000 is my variable cost, is everyone understood? We prepared the income statement. Yes, correct. 80,000. Yes, Swati, you are also correct. Contribution upon sales. So this is how you approach. This is how your approach should be for leverages ka question or financial ratio ka question. From one end, you get some another clue. From another clue, third hint, third say fourth hint, fourth say final destination and final outcome. So we are done with practical problem number 3. For company B, you have to do it in homework. The approach, the pattern will remain same. You have to prepare 4 working notes for company B, but you have to try it at your home. Any queries still here, students? Can we move forward in our lives? Yeah, let's move. The capital structure of PS Limited at the end of current financial year consisted as follows. So capital structure consists of equity share capital of 10 lakh and face value is 100. So can I say my number of equity shares are 10,000, correct? And debentures are valued at 10 lakh. During the year, sales decreased to 1 lakh units as compared to 1 lakh 20,000 units in the previous year. So my old sales was at 1 lakh 20,000 units, and during the year, new sales, revised sales is decreased to 1 lakh units. The selling price stood at 12 and variable cost stood at 8 per unit for both the years. So in other words, my contribution per unit for both the years is 4. The fixed cost is 2 lakh per annum and the income tax rate is 30%. You are required to calculate the following: degree of financial leverage at 120 and at 1 lakh units, degree of operating leverage again at 120 and 1 lakh units, and percentage change in EPS. Okay. So we know the formula. Formula of financial leverage is EBIT upon EBT. Why EBIT upon EBT? Because there are no preference share capital in the capital structure. That's why. Operating leverage का formula, contribution upon EBIT. So when I say to find these variables, first we need to prepare income statement because that would be our source document. So let's prepare income statement at 1 lakh 20,000 units and at 1 lakh units. I can directly start with contribution because sales and variable cost per unit are same for both the years. Yes or no? And contribution per unit is how much? 4. Yes or no? So can I say my contribution for 1 lakh 20,000 units would be 4 lakh 80 and 4 lakh. From this, if I subtract fixed operating cost, I will get EBIT. So fixed operating cost is given in the question. It is at 2 lakh per annum. Fixed cost will remain same. It will be at 2 lakh only. Whether the number of units are 1 lakh 20,000 or 1 lakh, fixed cost will remain same. So my EBIT is 280 and 2 lakh. Less interest. My interest will be on debentures. It will be 10 lakh ka 10%. Yes or no? 10 lakh. 10% on 10 lakh. Again, this will be same for both the years. 1 lakh. 1 lakh. So my EBT comes to 1 lakh 80,000 and 1 lakh. If I subtract tax, tax is at 30%. I will get earnings after tax. Since there are no preference share capital in the capital structure, so there would be no preference dividend. So in other words, this earnings after tax would be my earnings to equity shareholders, correct? And if I divide this by number of equity shares, I will get EPS. Tax is at 30%. So here it would be 54,000 when my number of units is 1,20,000, and here at 1 lakh units it would be 30,000. Correct? My earnings after tax 1,26,000 and 70,000. Number of equity shares. Can I say 10 lakh is the equity share capital and one share is having face value of 100. So my number of shares would be 10,000. So divide by 10,000. EPS comes to 12.6 and 7. Correct? Yes or no? So with this, I have completed my income statement. Now let's move on to the question. First, they have asked degree of financial leverage at 1,20,000 and 1 lakh units. So let's calculate that. Question 1. Financial leverage. Financial leverage. The formula of financial leverage is EBIT upon EBT. Yes or no? At 1,20,000 units and at 1 lakh units. My EBIT is 2 lakh 80 and EBT is 1 lakh 80. 280 divided by 180. At 1 lakh units, my EBIT is 2 lakh and EBT is 1 lakh. 2 lakh and 1 lakh. So here it is 2 times and here it is 280 divided by 180. 1.56 times. Is everyone following? Similarly, we can calculate operating leverage as well. Operating leverage, the formula is contribution upon EBIT. So at 1,20,000 units and at 1 lakh units, contribution is 480 and EBIT is 280. 480 and EBIT is 280. Here contribution is 4 lakh and EBIT is 2 lakh. So it comes to 2 times, and at 1,20,000 units it comes to 1.71 times. Follow any questions here, students? Any questions here in part 1 and part 2, calculation of financial leverage and calculation of operating leverage done? Third, they have asked percentage change in EPS. Simple. Percentage change in EPS. It was 12.6 in earlier period, which fell down to 7. So can I say in absolute terms, in absolute amount, it fell by rupees 5.6? Yes or no? But if I want to find it in percentage, it would be 5.6 divided by 12.6 into 100. Yeah, are you getting this? In absolute amount, it fell by rupees 5.6. But here they have asked in percentage. So can I say 5.6 divided by 12.6 into 100? So around how much percent it comes to, around how much percent? 75, 74.44. बोलो कितना आ रहा है? It's 44. Okay, 44.44. In my calci, there is some error in first number. It does not come clear. It does not appear clear. So 44.44%. Part 3. Percentage change in EPS. It is nothing but 5.6 divided by 12.6 into 100, which is around 44.44%. ठीक है. Done with practical problem 4. Any queries? Any questions? Everyone? Can we move ahead? Can we move forward? Yes, sometimes it depends on which financing profile your job lies. So if you are into treasury management, if you are into forex and currency management, then in that case you might not face with leverages, but otherwise generally leverage decisions are used in corporate finance as well. The entire paper or entire subject of financial management is very, 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 very practical. It has lot of relevance in your practical life. I have personally experienced that as well. Let's move to practical problem 5. The sales revenue of TM Excellence Limited at 20 per unit of output is 20 lakhs and contribution is 12 lakhs. At the present level of output, DOL means degree of operating leverage. DOL, degree of operating leverage. In short, it is called as DOL. The DOL of the company is 2.5. The company does not have any preference shares. This they are specifically mentioned. The number of equity shares are 1 lakh. Applicable corporate income tax rate to the company is 50% and rate of interest on debt capital is 16%. Calculate the EPS at sales revenue of 20 lakhs and amount of debt capital if a 25% decline in sales will wipe out EPS. We are in practical problem number 5. In practical problem number 5, they have asked two things to calculate. One is find the EPS amount and second is find the debt capital. Okay? They have given certain variables. They have given some leverages, some hints as well. So based on that hints, based on the variables, based on the details given in the question, we will start our treasure hunt game. Okay? Are you getting this? First, again, they have asked us to calculate EPS, and EPS can be calculated by preparing income statement. So let's first prepare the income statement. It will start with sales less variable cost will give me contribution less fixed cost will give me EBIT less interest will give me EBT less tax will give me EAT. And if I divide this by number of equity shares, I will get my EPS. There is no preference shares in the question, so there would not be any preference dividend. Understood? So first step is to prepare the format. Second step, fill this table. Fill the amount that is directly given in the question. They have given sales ka amount. Yes or no? They have given contribution ka amount. So let's substitute that. Sales is 20 lakhs. Contribution is 10 lakh. So in other words, my balancing figure of 10 lakh would be variable cost. Understood? Apart from this, what they have given? Have they given any direct values that we can substitute in the income statement? I cannot see any direct value. Yes, they have given the number of equity shares are 1 lakh. So here the number of equity shares, we will divide it by 1 lakh. This is given in the question. So I have just substituted what is directly given in the question. First step is always prepare a format, substitute the values that are directly given in the question. Don't think much. Now try to pick some hint. Now our treasure hunt game starts here. Bolo. They have given degree of operating leverage. DOL is 2.5. So when I say contribution upon EBIT is 2.5, I have operating leverage, I have contribution. I can easily calculate my EBIT. Yes or no? So first hint is to calculate EBIT. Working note 1, calculation of EBIT using DOL. DOL is equal to contribution upon EBIT. $2.5 is equal to contribution is 10 lakhs and EBIT I don't know. Therefore, my EBIT comes to 4 lakhs. Is everyone with me? Are you all following? So I will substitute the value of EBIT which comes to 4 lakh. And this we have solved by working note or from working note number 1. So बातों में, can I say my fixed cost would be 6 lakh? This is the balancing figure. Everyone following till here? This is the first hint that we have used. Any questions? Any questions, students? Okay. Now, do we have interest ka figure given in the question? No, we don't have interest. We know the rate of interest, it is at 16%. We know the rate of interest, it is at 16%. If we get our debt amount, we can apply 16% to it and we can calculate interest. But we don't know the debt amount as well. This is what they have asked in the second part. We don't know the debt capital. Had the debt capital given in the question, we would have just multiplied it by 16% and got our interest figure. But that debt amount is what we are required to find in this question. So since no debt capital, we cannot find this interest. No interest, no EBI, no EBT, no tax, no EAT. So obviously now we will have to use our another hint. Another hint. So another hint is the last line. A 25% decline in sales will wipe out my EPS. If what does this wipe out my EPS mean? Let's say my EPS in this case had come to, let's say, 10. Wipe out my EPS means my new EPS would be 0. Wiping out means completely removing out the EPS. So can I say 25% change in sales or decline in sales is resulting in 100%? They are. Is resulting in 100% decline in EPS? Yes or no? Had my EPS been 10 over here, it says that if my sales decline by 25%, the EPS would have been wiped out. Wiped out means, can I say it would have become near zero? And zero means 100% fall in EPS. Is everyone following? Did you get this? 25% decline in sales is wiping out EPS, means there is wipe out of 100% of EPS. Yes, zero EPS. So, in other words, can I say there is 100% fall in EPS? 100% fall. Had the EPS been 20, so again it would have been wiped out to zero. So again 100% fall. Had the EPS been 200, it would result in wipe out of EPS. 100% fall in EPS. Understood? So this is the second hint that they have given in the question. What is the second hint? 25% decline in sales is resulting in 100% decline in EPS. Are you getting this? So in other words, indirectly, they have given information on combined leverage. Yes or no? Sales to EPS ka relationship, sales to EPS ka study is about combined leverage. Are you following? Are you following? Are you able to catch the hint? 25% decline in sales is resulting in 100% decline in EPS. So in other words, they have given information on combined leverage. Yes or no? So when I say my combined leverage is nothing but percentage change in EPS upon percentage change in sales is nothing but 100% change in EPS divided by 25% change in sales. So when I say my combined leverage comes to 4 times. Everyone understood this point? Any queries still here? Because I cannot move forward if you have not understood this combined leverage. Akka? Sure? Okay, since no one is responding, I will assume that you all have followed. So my combined leverage comes to 4. So in other words, can I say my combined leverage is nothing but contribution upon EBT? This is the formula of combined leverage. Combined leverage of 4 is equal to contribution figure I have. I don't know the EBT ka value. So therefore my EBT will be equal to 2,50,000. Are you understood? Did you understand this? So my EBT here, it comes to 2,50,000. This is from working note number 2. So in other words, my interest here would be how much? 1,50,000 balancing figure. Yes or no? Balancing figure. So in other words, now I can easily find this debt capital. Yes or no? So my debt capital would be working note 3. Amount of debt capital. It would be nothing but interest amount in rupees divided by interest rate in percentage. Interest amount is 150 divided by interest percent is 16, which means 0.16. So my amount of debt capital is 937,500. Amount of debt. Understood everyone? So 937,500 pay 16% if you do, you will get 1,50,000. Correct? Tax rate is given in the question. tax rate, income tax rate applicable to the company is 50%. So I can easily solve this now. So my earnings after tax would be 1,25,000. Yes or no? Number of shares is 1 lakh. Divide by 1,25,000. So my EPS comes to 1.25. Followed everyone? Here they have asked two things. EPS, which is 1.25, and amount of debt capital, which comes to 937,500. Bolo. Any doubts? Any questions in practical problem number 5? Do you have any queries? Any concerns? Are you all able to digest in your mind? Are you enjoying the treasure hunt game? Treat FM like a game. You will enjoy it. Question 6. Am I going at a proper pace, or am I going little fast, or am I going too slow? What is your opinion? What is your view? This pace is comfortable to you all? Okay, thanks. Betatronics Limited has the following balance sheet and income statement information. So balance sheet they have given. Again, in the balance sheet there is no reference to preference shares. So preference dividend will not be there. Income statement they have given. Determine the degree of operating leverage, financial and combined leverage at the current level of sales if all operating expense other than depreciation are variable cost. Okay. So here they have said that all operating expense other than depreciation are variable cost. It means of this 1,20,000, total operating expense given in the question is 1,20,000. Other than depreciation means 60,000 of operating expense is variable cost, and depreciation, which will be a fixed cost, fixed operating expense. Yes or no? Very simple. So in this question, they have not given the breakup of variable and fixed directly. They have given an information to it in the notes. So they have said that of this 120, this 120 consists of both operating and fixed. But they have said other than depreciation, everything is variable. So 60,000 is variable, 60,000 is fixed operating expense. Interest is given. Okay, so part A is very simple. Part A, we have to just apply the formula from income statement. Problem number 6. Part A. Calculation of operating leverage. Operating leverage is equal to contribution upon EBIT. How much is the contribution? How much is the contribution? Can I say contribution is nothing but sales minus variable cost? Yes or no? Divided by EBIT. EBIT figure we have. Sales is 340. Variable cost is not 120, it is just 60. Balance 60 is depreciation, and that depreciation is fixed operating cost. And my EBIT given in the question is 220. So operating leverage comes to 1.27 times 1.2727, correct? Then let's calculate financial leverage. Financial leverage is equal to EBIT upon EBT. And this formula can be used when there is no preference share capital in the balance sheet. So again, this question does not have any preference share capital in the balance sheet. So we can use this formula, EBIT upon EBT. EBIT is 220, EBT is 160. 220 upon 160. Financial leverage comes to 1.375. Combined leverage is nothing but operating leverage into financial leverage. Operating leverage is 1.2727. Financial leverage is 1.375. 1.75 times, or in ratio it will be 1.75:1. Well, any questions here in part A? Any questions? What is 2.8 lakh? Om Prakash, what is 2.8 lakh? I am not able to get that. Okay. So I have done some mistake. Any questions here? Students, can I move to part B? Okay. Let's move to part B. Now what they have asked in part B, let's see that. If total assets remain at the same level, but sales increase by 20%, and under second scenario it will decrease by 20%, compute earnings per share at the new sales level. So what they have asked two scenarios. One scenario is when sales increase by 20%, and another scenario is when sales decrease by 20%. Yes or no? These are the two scenarios, and under both the scenarios we need to calculate EPS. Is everyone following? I will solve it for scenario 1, and I would want you all to solve it for scenario 2. You try it when sales decrease by 20%. As of now, I will help you in solving scenario 1, sales increase by 20%. So current sales is 3,40,000. Current sales is 3,40,000, correct? And if it increases by 20%, so when I say new sales would be 408. Acha, if sales decreases by 20%, so in that case, new sales would be 2,72,000. Yes or no? Less variable cost. Variable cost. My variable cost is not 1,20,000. Again, 120 includes fixed cost of depreciation. Variable cost from that 1,20,000, it is just 60,000. And can I say if sales increase by 20%, my variable cost will also increase by 20%? Yes or no? So it would be 60,000 plus 20% in this case. 72,000. 72 कैसे आया? 60,000 plus 20%. And under second scenario, it would be 48,000. It would be 48,000. 60,000 minus 20%. So my contribution comes to 3,36,000 under scenario 1. 272 minus 48. 2,24,000 under scenario 2. Less fixed cost. Here, fixed operating cost only consists of depreciation, which is of 60,000. Fixed cost will remain same under both the scenarios. It has no effect with change in sales. So my EBIT would be 276 under scenario 1 and 164 under scenario 2. Less interest cost. How much is interest given in the question? 60,000. So again it will remain same under both the scenarios because interest is a fixed financing cost. So my EBT would be 216 under scenario 1 and 104 under scenario 2. Less tax. Tax rate is at, and as a tax rate is not given in the question, but we can easily find. Tax rate would be 156 divided by 160. Sorry, 56,000 divided by 160. 35%. Tax rate is not mentioned in the question, but they have given information on the tax rate indirectly. So my earnings after tax would be 140,400 under scenario 1 and 67,600. There is no preference dividend given in the question, no preference share capital in the question. So my earnings after tax will be my earnings to equity shareholders. And if I divide this by number of equity shares, how much is my number of equity shares? Can I say it is 8 lakh divided by 10, 80,000. 8 lakh ka share capital and one share is of 10 face value. My EPS comes to 1.755 and under second scenario it comes to 0.845. Understood. So they have asked us to compute the EPS under both the scenarios. So we have calculate EPS under both the scenarios. Any doubt? Any doubt? Any queries, students? Sure. My video is visible to you all, right? Okay. So with this, we have completed question 6 as well. We still have half an hour. We will try to solve as much problems as possible. Practical problem number 7. A company had the following balance sheet at the end of current financial year. This is the balance sheet details that is given in the question. Again, from the balance sheet, we can see that there is no preference share capital given in the question. Fixed cost per annum excluding interest is 4 crores. So when I say this fixed cost is nothing but operating fixed cost, because excluding interest, all the fixed cost would be operating fixed cost. Okay? So my operating fixed cost is 4 CR. Variable operating cost ratio is 65%. So in other words, contribution margin would be 35%. Asset turnover 2.5 times. Income tax rate 30%. Calculate the following and comment. EPS. So they have asked us to calculate EPS and three leverages. Again, to calculate EPS, we need to prepare the format of income statement. So let's start solving problem 7 by preparing income statement. Sales less variable cost, contribution less fixed operating cost, EBIT less interest, EBT less tax at 30%, EAT. There is no preference dividend, so my profit after tax would be earnings to equity shareholders divided by number of equity shares, and I will get EPS. So first part A is asking about calculating EPS. Okay? So let's first prepare a format that we have already prepared. Next task is to substitute the value that is given in the question. In this question, they have directly given the value of fixed operating cost, which is 4 CR. So we will substitute that. Now, let's try to use some hint and start our treasure hunt game. Which would be our first hint, students? आपको क्या लग रहा है? What is your view? From where we should start our treasure hunt game? Total asset turnover ratio. Correct. Perfect. Let me slide down my curtains. There is some sunlight coming out. I think sunlight is coming on the face. Let me arrange the curtains. Is my video visible to you all, students? Sure? There is no disturbance in the video, right? Okay. Okay. So yes, so our first hint would be using sales turnover ratio. Sorry, asset turnover ratio. Calculation of sales using asset turnover ratio. Yes, ratio के students. What is the formula of asset turnover ratio? Can I say it is nothing but sales upon total assets? This you have already learned in ratios chapter, financial ratios. So my total assets is 20 and my asset turnover ratio is 2.5. I don't know the sales value, but I know the total assets value, which is 20 CR. So my sales comes to 50 CR equal to 50 CR. So I can substitute the value of sales in my income statement, which is 50 CR. And this I've calculated from वर्किंग नोट नंबर 1. ठीक है. नाउ माय वेरिएबल कॉस्ट टू सेल्स रेशियो इज गिवन 65%. So when I say my contribution margin, in other words, in other sense, would be 35%. Yes or no? So my variable cost is 32.5 CR, which is 65% to sales. And my contribution in this case would be 17.5 CR. I have fixed operating cost of 4 CR. So when I say my EBIT is 13.5 CR. Now interest. Interest I have to calculate on debt. Debt capital is 10 CR and interest rate is 15%. Can you see here in the balance sheet? 10 CR and interest rate is 15%. So when I say my amount of interest would be 10 CR into 0.15, which comes to 1.5 CR. So my EBT would be 12 CR. Tax rate is given at 30%. Yes or no? So tax amount comes to 12 CR पे 30%, which is 3.6 CR. So my earnings after tax would be 8.4 CR. Now my number of equity shares. Equity share capital, they have already given, see, 50 lakh shares of 10 each. When I say my number of equity shares in CR is 0.5, 50 lakh is nothing but 0.5 CR. So my EPS comes to rupees 16.8. This is part A that is asked in the question. So here our hint was just using asset turnover ratio and calculating sales. Bolo friends, any queries? Any doubt? Only Om Krishna Gupta is clear. Any other students? Only he is responding. All other students slept or what? Okay. So part A is done. Part B is just calculating three leverages. Part B, what they have asked in part B, operating leverage. Part C, financial leverage. Part D, combined leverage. Operating leverage is nothing but contribution upon EBIT. Financial leverage is nothing but EBIT upon EBT. Combined leverage is nothing but OL into FL. So my contribution is 17.5 CR and my EBIT is 13.5 CR. So operating leverage comes to कितना आ रहा है? My EBIT is 13.5 CR, EBT is 12 CR. This comes to 1.125. How much is operating leverage? I'm not able to see the numbers in my calc for operating leverage. 1.296. Okay. So my combined leverage 1.296 into 1.125. 1.458. Correct. 1.45 or 1.46. Follow students. Any questions? Practical problem 8, you can solve it at your home. You can try it out at your home as homework. Under this question, I will just quickly explain you the approach of this question. Question says calculate operating leverage, financial leverage, combined leverage from the following data under two situation. Situation 1, situation 2, and under 2 financial plan A and B. Okay? So they have given certain information that installed capacity is 4000, but we are not using the installed capacity. We are just using 75% of the capacity. So can I say my sales in units would be 4000 into 75%, that is 3000 units. Selling price is 30, variable cost is 15, contribution would be 15 per unit. I'm just quickly going through problem 8. You need to solve as homework. Contribution per unit would be 30 minus variable cost is 50. Correct? Sales in units. Hey, yaar. Problem 8. Contribution per unit. 30 minus 50 comes to 50. Sales in units would be 4000 ka 75%, which comes to 3000 units. Yes or no? So my sales in amount, sales in rupees would be 3000 into 50. What is happening here? AR. So sales in rupees comes to 45,000. This is problem 8. Sales in rupees comes to 45,000. Now, sorry, not sales but contribution in rupees. Contribution in rupees. 3000 is units, multiply by contribution per unit, which was 15. So my contribution per unit comes to 45,000. Now you have two situations. Situation 1 and situation 2. But under both this situation, we have two financial plan. Financial plan A and financial plan B. Again, under situation 2, we have financial plan A and financial plan B. So it is not that financial plan A will go to only situation 1 and financial plan B will go to only situation 2. No, it is not likewise. This is mistake that students do in examination. Both the financial plans are applicable to both the situations. Are you getting this? So what is situation 1? Situation 1 is fixed cost is 15,000. Situation 2 is fixed cost is 20,000. Yes or no? Fixed cost is equal to 15,000. Fixed cost is equal to 20,000. Are you getting this? So my contribution, whether it is situation 1, whether it is situation 2, it will be at 45,000 only for both the financing plans. I will subtract fixed cost. Correct? Fixed cost under situation 1 is 15,000. So I will subtract 15,000 for situation 1 for both the plans and 20,000 for situation 2, but again under both the plans. Are you following this? So it is not like the financial plan A is just to situation 1 and B, financial plan B belongs to situation 2. No. Both the financial plans will belong to both the situations. So I will get EBIT, which is nothing but 30,000. Here it will be 25,000 and 25,000. Less interest. Now see interest. Can I say interest would be 10,000 pay 20% for financial plan A? Yes or no? Financial plan A consists of debt of rupees 10,000. So under financial plan A, I will pay interest of 2,000. Yes or no? So financial plan A will have interest of 2,000. Are you getting this? And financial plan B consists debt of 5,000 at 20%. Hey, why this is happening again and again? I'm not understanding. This is very frustrating here. Is everyone following what I discussed right now? So situation 1, situation 2, contribution 45,000 for plan A, plan B, for plan A, plan B. Fixed cost. Under situation 1, it is at 15,000, and under situation 2, it is at 20,000. So my EBIT is 30,000 for plan A and B under situation 1 and 25,000 for plan A and B under situation 2. Now interest. See now interest. Interest for plan A would be on 10,000 pay 20%. Can I say 2,000 for plan A? Because plan A consists of 10,000 debt and interest rate is 20%. Plan B consists of just 5,000 debt and interest rate is 20%. So can I say for plan B, it would be 1,000 interest. Are you getting this? And from now on, you just need to calculate EBT, less tax, less preference dividend if there is preference share capital, and divide by number of equity shares. So here the point was just to explain that financial plan A and B belongs to both the situation. They belongs to situation 1 as well and situation 2 as well. What students do in examination, they take financial plan A for situation 1 and just take financial plan B for situation 2, which is incorrect, which is not correct. Are you getting this? The point here was to explain that both the financial plan goes to both the situation. Hope everyone is following. Hope you all are understanding. Okay? And from now onwards, from EBT, you can calculate as a homework. You can calculate as homework. Okay? Since we have 10 more minutes, we can take problem number 10. We can take problem number 10. The following details of the company for year ended 31st March are given below. So they have given operating leverage 2:1 means 2 times only. Yeah? You can denote leverage in ratio form as well, in times as well. So 2:1 means operating leverage is equal to 2. Combined leverage is 2.5:1 means 2.5. Fixed cost excluding interest means, can I say this is fixed operating cost of 3.4 lakhs? Sales is given 8% debenture of 100 each. So 30.25 lakh is my debt and interest on debt is 8%. Equity share capital is 34 lakh. One share is of 10 face value. So can I say number of equity share is 3.4 lakhs? Income tax rate 30%. First, they have asked financial leverage. Very simple. Very, very simple. Financial leverage. We have combined leverage and we have operating leverage. So it is nothing but combined leverage divided by operating leverage. Combined leverage is 2.5. Operating leverage is 2. So when I say my financial leverage comes to 1.25, yes or no? So part 1 is very, very simple. Just using the formula of leverages. Second part, they have asked PV ratio and earnings per share. Okay. Part 2 is PV ratio. Can I say PV ratio is nothing but contribution upon sales into 100? This is what PV ratio means. So if we are able to get the value of contribution and if we are able to find the value of sales, our job is done. We will easily be able to solve PV ratio. Yes or no? So let's focus. How shall we calculate contribution? Bolo, how shall we calculate contribution? How shall we calculate contribution? Again, treasure and game. Again, treasure and game. Try to pick one information from the question and try to reach to the contribution, to our destination, which is nothing but contribution. So can I say we have operating leverage? We have operating leverage, which is nothing but contribution upon EBIT, correct? In other words, can I write this way also? Contribution upon EBIT is nothing but contribution minus fixed cost. Yes or no? I can write this way also. EBIT is nothing but contribution minus fixed cost. Is everyone getting? This is the hint that we need to capture from question. So I have operating leverage. I don't know contribution. I don't know this figure, but I have fixed cost. So I can easily find the third variable. In the formula, we have three variables: contribution, fixed cost, and operating leverage. Of these three variables, I have two variables in the question. So I can easily find the third one. Yes or no? So therefore, operating leverage is 2. Contribution, I don't know. And fixed cost is given in the question, which is 3.4 lakhs. ठीक है. So can you tell me what is the amount of contribution? Can you tell me what is the amount of contribution? कितना आ रहा है? 6.8. 6.8 lakh. Yes, correct. 6.8 lakhs. That is correct. So I have contribution of 6.8 lakh and I have sales of 50 lakh. So I can easily find PV ratio. PV ratio is nothing but contribution upon sales into 100. So my PV ratio comes to 13.6%. Is everyone following this? Sales is given in the question. Sales is 50 lakhs. Followed everyone? So we are done with part 2, PV ratio. There is another part as well. We need to calculate EPS. And to calculate EPS, we can prepare the format starting from sales and ending till EPS. Okay? So let's calculate part B of second question. Calculation of EPS. Sales is at 50 lakh. Variable cost, I don't know as of now, but I know my contribution is 6.8. So can I say balancing figure would be variable cost? Fixed cost, fixed operating cost is given in the question at 3.4 lakh. So can I say my EBIT would be 3.4 lakhs? Yes or no? Interest, I can calculate interest from the question. Debt is at 30.25 lakh and interest is 8%. So when I say interest amount would be 2.42 lakhs. So my EBT comes to 0.98 lakhs. If I reduce tax at 30%, I will get EAT to 0.98 less 30%. So my EAT comes to 0.686 lakhs. Tax ka figure, you can treat it as balancing figure. Since there is no preference share capital, this earnings after tax would be my earnings to equity shareholders. And if I divide this by number of equity shares, I will be able to find EPS. So equity shares, again 34 lakh is the equity share capital. Yes or no? And one share is of face value 10 each. So my number of equity share is 3.4 lakh. Yes or no? My equity share is, number of equity share is 3.4 lakh. So 0.686 divided by 3.4. कितना आ रहा है बोलो? My EPS comes to how much? Students, 0.20. Correct. 0.2017. So this is my EPS. So part 2 is done. We have calculated EPS and we have calculated PV ratio. Part 2 is done. Third part. What they have asked in third part, if a company belongs to an industry whose assets turnover ratio is 1.5, does it have high or low asset turnover? So the industry turnover ratio, industry asset turnover ratio is 1.5. As of now, we don't know the asset turnover ratio of our company. Let's calculate that. asset turnover ratio. The formula of asset turnover ratio is sales upon total assets. Can I say my sales is given 50 lakhs and my total assets here, it would be nothing but total of the liability side. So can I say it would be nothing but 30.25 lakhs of debt and 34 lakhs of equity share capital, because there is no information on current liability, there is no information on reserves and surplus. So in absence of that information, our debt plus equity share capital will be my total liability side and my total asset side. Correct? So 30.25 lakh of debt plus 34 lakh of equity. 30.25 plus 34. 64.25. So 50 divided by 64.25. It comes to how much? 0.778. Yes or no? Whereas the industry standard is 1.5. So can I say it has company has low asset turnover ratio compared to industry? Yes or no? Everyone in industry is earning or is generating 1.5 rupees of sales on investment of 1 rupees on assets. But my company is generating 0.78 rupees of sales on 1 rupee of investment in assets. So my company has low asset turnover ratio compared to industry standards. Okay, did everyone follow this? Did everyone follow this? At what level of sales? Point fourth is number 4. At what level of sales? At what level of sales my EBT will be equal to 0? My EBT will be equal to 0. My current EBT is 0.98, correct? So at what level of sales it will be equal to 0? So can I say there is again 100% decline in EBT? Yes or no? Are you getting this? Current EBT is 0.98 and they are asking when will be my EBT be 0? So can I say they are indirectly saying that there is 100% fall in EBT? Are you able to understand this? They have indirectly said that there is 100% decline in EBT. Did everyone get this? Please respond. Please respond so that I can continue ahead. I can take this question forward. If you have not understood this, you will not be able to solve this. Indirectly, they have said that EBT is 0 means there is 100% decline in EBT. So at what level of sales? Indirectly, they have asked that sales should be fall by how much percent? So can I say sales to EBT ka study is about combined leverage? Study from sales to EBT is all about combined leverage. And combined leverage in our present question is given. It is how much? It is 2.5 times. It is 2.5 times. 2.5 is to 1. Are you getting this? So in other words, my combined leverage is nothing but percentage change in EBT upon percentage change in sales. Correct? I have this combined leverage of 2.5 times. My percentage change in EBT is 100%. I don't know the percentage change in sales. I have to find that. So can I say my percentage change in sales would be 40%? Yes or no? My percentage change in sales would be 100 divided by 2.5, which is nothing but 40%. Yes or no? So can I say my sales will fall by 40%? This question mark here, it is nothing but 40% decline in sales. Are you getting this? So my new sales in that case would be 50 lakhs, which is the original sales, and it will now fall by 40%, which comes to 30 lakhs. So my new sales. So when my sales is at 30 lakhs, my EBT would be zero. Are you getting this? It would not be now 0.98 lakhs, but it would now be at zero. Are you getting this? So 40% decline in sales is resulting into 100% fall in EBT. Are you getting this? So my revised sales would be 30 lakhs. So if you want to calculate EBT at 30 lakhs, you can try here. You can take sales at 30 lakhs and calculate this EBT. It will be zero. Correct? Followed everyone? So with this, we have revised the chapter of leverages. It is very simple chapter. Not one of the simple, but simplest chapter of financial management. And generally in exams, if leverage question comes, then it comes to about 4 to 5 marks. So it is bonus for us. So any queries, any concerns? I will wait for 2 minutes. Otherwise, we can end this session. Thank you, all of you, for your participation. I wish you all the best for your examinations. Thank you. Work hard, study well. Thank you.